you know 1 in every 3 lottery winners goes bankrupt within 5 years? Turns out most people have no idea what to do after they win. But lucky for you, lottery lawyer Kurt Panusis has finally revealed the big secret about what you need to do after winning. He has helped over 50 major lottery winners, including a $1.05 billion winner, and now he has decided to help future winners. Let's see what advice he has for you. The initial challenges. We're going to start at the very beginning. What happens right after you win? Well, winning the lottery is supposed to be the best thing that ever happens to you. And for a little while, it is. You wake up every morning knowing you will never have to check your bank balance before buying something. You can book flights, buy cars, pay off debt, and take care of your family. Life is finally easy. But there is one thing no one tells you. The money does not come alone. It brings problems, expectations, guilt, stress, and more responsibility than you have ever had before. If you don't prepare for what's coming, this dream can shatter, or worse, turn into a nightmare. Kurt says the first mistake people make is assuming their only problem is spending wisely. That's not it. The real problem is everyone else. People change when they think they have unlimited money. Some will celebrate you while others will resent you. And some will see you as their personal ATM. Suddenly, everyone you know has a crisis they need help with. Your coworker's mom needs surgery. Your cousin is about to lose his house. A friend you barely talk to anymore needs just a small loan to start a business. At first, you might feel like helping, and honestly, that's great. You should help where you can, but only after you have a plan. If you start giving away money just because you feel bad, it will never stop. People talk, and the second someone gets a check from you, others will come asking. They will make you feel like a bad person for not handing over a piece of your winnings, like you owe them something. Take your time. According to Kurt, the best way to avoid this is to not tell anyone you won. Not your friends, not your coworkers, not even family until you have figured out what you're doing. It sounds extreme, but you need time. Time to get the right people in place, time to decide on how you want to handle your money, time to let the shock wear off. And if you live in a state where winners have to go public, delay claiming your prize for as long as possible. Once your name is out there, you lose control over who knows. Even if you manage to stay quiet, there is still the issue of scammers. Once money enters the picture, the world starts looking at you differently. Fake charities will reach out. Investment opportunities will show up in your inbox. Financial advisors will claim they can double your money with some low-risk deal. It's all nonsense. Even some legit investment firms will try to take advantage and push you into deals that sound good, but mostly benefit them. Build a team. The best way to protect yourself is by building a solid team before you claim the money. You need a lawyer, a CPA, and a financial planner. And not just any random professionals. You need people who specialize in high net worth clients. Not your family friends, not any self-taught financial gurus. Just experienced professionals who know what they're doing. And don't be afraid to interview multiple people before deciding. The right team will save you millions in taxes, legal fees, and bad investments. Now let's talk about actually claiming your winnings, because this is where a lot of people make their first big mistake. What to do with the ticket? You see, every state has different rules, and you must claim in the state where you bought the ticket. It doesn't matter where you live, you will need to go back to that state to claim. And before you do, take a minute to think about how you're going to do it. You might be tempted to grab that ticket and rush straight to the lottery office. Don't! Kurt says that the very first thing you should do is make copies of the front and back of the ticket. Take pictures. Store the original somewhere safe. It can be a locked safe, a safety deposit box, or anywhere secure. The ticket is literally a piece of paper worth millions. If you lose it, that's it. Lottery lawyer Kurt Panusis also gave one piece of advice that shocked us all. You know how people always tell others to sign their tickets? Even the lottery tells you to sign the back immediately. But Kurt Panusis advises not to sign your ticket right away. You see, once your name is on it, it is legally yours, and that means you lose the option to claim it through a trust or LLC. If you want to stay anonymous or have better tax planning options, talk to a lawyer before signing. You only get one chance to claim this money the right way. Then there is the question every lottery winner has to face. Lump sum versus annuity. Do you take the lump sum or choose an annuity? If you take the lump sum, you get all your money at once, but there is a downside. You'll have to pay taxes on it immediately. On the other hand, if you take annuity payments, you'll get smaller amounts every year for the next 30 years, and in the end, you'll technically receive more money. So what does Kurt think you should do? Well, a lot of people think annuity is the better choice because it guarantees a steady income. But Kurt says that if you do that, you're relying on the government to send you checks for 3 decades. That's a long time, and you have no control over what happens to tax rates in the future. If taxes go up in 10 years, your future payments will take a bigger hit. And if something happens to you before the 30 years are up, the remaining payments might not automatically go to your family, depending on state laws. On the other hand, the lump sum gives you complete control over your money right away. You take the tax hit up front, and whatever is left is yours to manage. If you invest it wisely, you can easily make back the difference. But that's the key here. You have to invest wisely. Most people are not used to handling that kind of money, and without a plan, they burn through it fast. The choice depends on how disciplined you are. So if you're good with money and have a solid team, take the lump sum but invest smartly. But if you think you'll struggle with self-control, an annuity might protect you from yourself. Just make sure you understand the long-term effects of either decision before choosing. Taxes. And now the part no one likes to think about. Kurt also talked about taxes. The IRS is getting its cut. The federal tax on lottery winnings is 37% right off the top. If you live in a state with no lottery tax, that's all you'll owe. But if you live somewhere like California or New York, expect another 10 to 13% gone in state taxes. That means if you win $100 million, after federal and state taxes, you might walk away with closer to $50 million. This is still a lot of money, but a big difference from what you expected. Kurt also talked about another thing most people don't think about: estate taxes. You see, if you take the annuity and pass away before all the payments are made, your family might owe estate taxes on the remaining balance. That can be a huge financial hit, and it's something you should plan for early on. Winning the lottery doesn't mean you'll stay rich forever. You have to do something for that. It's easy to assume you'll be different, that you won't make the same mistakes other winners have made. But without planning, you can lose everything just as fast as you got it. But Kurt has the right advice for you. This is what you should do after dealing with the initial challenges: saving and investing. Your sole focus after matching your winning numbers should be on protecting those winnings. You see, protecting your lottery winnings is just as important as winning in the first place. We have already talked about how keeping your identity private is a huge advantage, and trusts or LLCs can help with that. But anonymity is only one piece of the puzzle. Even if you manage to stay out of the spotlight, you still have to handle your money the right way or it won't last. Bank accounts. One of the first things you need to do after claiming your winnings is set up the right kind of bank accounts. And no, you cannot just walk into your local bank branch, hand them your lottery check, and expect things to go smoothly. Most regular banks are not equipped to handle massive deposits like this. Your average checking account is not designed to hold millions of dollars. In fact, most personal accounts are only insured for up to $250,000 under the Federal Deposit Insurance Corporation. So if your bank suddenly goes under, anything above that amount could disappear. That's why lottery winners need private banking, the kind offered by large financial institutions that specialize in handling wealth. Private banks cater to high net worth individuals, meaning they have experience managing large sums. They offer investment advice and protect your money from unnecessary risks. They'll set you up with the right kind of accounts, help you move money strategically, and make sure your funds are diversified across multiple safe institutions instead of sitting in one vulnerable place. If you just dump your money into a small credit union or a local bank, you're asking for trouble. First of all, smaller institutions are not designed to deal with multi-million-dollar accounts. Even if they technically accept your deposit, they might not have the proper security measures in place to protect it. You could also run into issues with withdrawals because banks have rules on how much you can take out or transfer at a time. Imagine needing to move money for an investment or major purchase and being told you cannot access your own funds because the bank is not used to handling that kind of money. Another risk is fraud and security breaches. Smaller banks often have fewer cybersecurity protections, making them easier targets for hackers. And unfortunately, even employees at financial institutions are not always trustworthy. There have been cases where bank employees leaked information about high net worth clients or even stole from their accounts. If you think people won't notice your sudden change in wealth, think again. The second a small bank sees a massive deposit come in, people start talking. So, how do you avoid these problems? First, work with a private banker, someone whose job is to help wealthy clients manage their funds. They'll make sure your money is split across multiple insured accounts, keeping each one within the FDIC limit. They'll also guide you on safe ways to store cash, move funds, and protect yourself from fraud. And unlike regular banks, private banking services offer customized financial solutions, meaning they will help with investing, estate planning, and large transactions without locking you into rules that don't fit your situation. Once your money is safely stored, the next big decision is how to invest it. The worst thing you can do is let it sit untouched in a regular savings account. Inflation will eat away at its value over time, and you'll miss out on opportunities to grow your wealth. The best investment options. Smart lottery winners focus on diversification, which means they spread their money across different types of investments to minimize risk. The key here is balance. You don't want all your money in one place, but you also don't want to spread it too thin or take on unnecessary risks. A solid investment strategy might look something like this. First, there should be a portion of money in stocks, which offer long-term growth potential. This means you invest in well-established companies like Apple, Microsoft, and Amazon. This way, your money will work for you instead of just sitting there. Next, you should invest in real estate, which can provide steady rental income and long-term appreciation. This means you should purchase commercial buildings, rental properties, or real estate investment trusts, instead of just buying mansions. A small part of your money should also go into purchasing bonds, which are safer and provide stable returns. These can help balance out riskier investments. And then keep some cash and liquid assets, so you always have money available without needing to sell investments during a market downturn. This way, if one market crashes, your entire fortune is not wiped out. Now let's talk about investment strategies for long-term wealth stability, because making money is one thing, but keeping it for life is another. The biggest mistake new millionaires make is jumping into high-risk investments without understanding them. People assume that because they suddenly have money, they know how to manage it. They don't. That's why so many lottery winners end up broke. A conservative investment strategy focuses on protecting what you have first, and then growing it. That means avoiding get-rich-quick schemes, high-risk investments, and anything that sounds too good to be true. Let us give you an example so that you understand it better. Say you have $50 million after taxes. A conservative plan would aim to live off investment income rather than spending the principal. If you invest wisely, you can earn millions per year in passive income without touching your original fortune. That's what wealthy families do. The safest way to do this is through low-risk, income-generating investments. This can be blue-chip stocks, index funds, dividend stocks, real estate, and conservative bonds. These don't offer insane returns overnight, but they also don't carry the risk of wiping you out. For example, if you put $30 million into a mix of dividend stocks and bonds, earning just a 4% return means you'll get $1.2 million per year in passive income. That's more than enough to live on comfortably forever, and your original investment is still growing. This is how wealthy people stay wealthy. They don't chase risky investments, they build slow, steady wealth over time. The real danger comes from bad financial decisions and scams. People will try to sell you on high-risk, high-reward investments like crypto schemes, startup businesses, luxury real estate flips, or even exclusive hedge funds. They will tell you you're missing out if you don't jump in. But the truth is, most of these fail. The golden rule is that if you don't understand it, don't invest in it. You don't need to double your money in a year. You need to protect what you have and let it grow safely. Even with all the right strategies in place, mistakes can still happen. The difference between winners who stay rich and winners who go broke is who they trust, how much they learn, and how patient they are. The smartest thing you can do is surround yourself with experienced professionals. Take your time making decisions and never let greed or pressure push you into a bad deal. Lottery lawyer Kurt Panosis says that he has seen it all. Winners who plan wisely and enjoy lifelong wealth, and those who make impulsive decisions and lose everything. His advice is to move slow, stay quiet, and think ahead. Quitting immediately. Kurt also made us realize one more thing. He said that one of the first things many winners say is, "I'm going to quit," and most people do. But Kurt says that before you hand in that resignation, make sure you have secured health insurance. Without an employer, you will need a private plan, and good coverage does not come cheap. Kurt warns that too many winners forget about this step and end up scrambling when a medical emergency hits. Lottery pools. He also had some advice for those who won in a group lottery pool because things can get tricky fast here. Everyone is happy when buying tickets together, but once money is involved, things can turn ugly. If there was no written agreement, there surely are going to be many fights. Some people will claim they should get more, others will say they were supposed to be in on the ticket. Kurt Panousis has seen cases where entire friend groups fell apart because someone was left out or felt cheated. His advice is to always put agreements in writing before buying tickets together. This does not have to be complicated. Just a simple document stating who's participating, how much they contributed, and how the winnings will be split. This protects everyone and avoids unnecessary drama. The final advice. And finally, don't rush into a completely new lifestyle overnight. It's tempting to go all in on a spending spree, buy a mansion, travel the world, or gift money to everyone you know. But quick changes lead to quick mistakes. Kurt recommends that everyone should take 6 months to a year before making any major purchases. Instead of immediately upgrading to a multi-million-dollar home, rent a luxury place for a while and see how it feels. Instead of buying cars for every relative, set up structured gifts or investments that won't drain your funds. The goal is long-term stability. You should never go for instant gratification. Winning the lottery gives you opportunities most people never get, but money alone does not guarantee success. The people who keep their wealth treat it like a business, not a jackpot. They protect themselves, plan ahead, and take advice from professionals who know what they're doing. Kurt has helped some of the biggest lottery winners in history, and his advice remains the same. Move slow, think long-term, and don't let the money control you. If you want to see what happens when lottery winners ignore Kurt Panousis' advice, watch our next video. You won't believe how fast some of them went broke within 5 years.